Over the years throughout my dividend investing journey, I pretty much since the start have been a huge fan of dividend paying ETFs and stocks for that matter that pay dividends on a monthly basis. Now I've talked about this in previous videos, but basically for me, the way that I see it, the faster that I can get cash flow into my portfolio in the form of cash balance, the sooner I can buy more dividend paying stocks and ETFs to compound my portfolio, create the snowball effect, and just simply own more assets more quickly. Now that of course does not mean that quarterly paying ETFs and stocks are by any means bad. I own tons of them throughout my portfolio as well. But in this video, we're going to go through my long-term dividend growth portfolio, and I'm going to share with you 5 of my favorite monthly paying dividend ETFs that I currently hold substantial positions in my portfolio. We're then going to go through each of these ETFs, share what they have to offer, and see if they potentially could be a good fit for your portfolio. So if you want to see some of my favorite monthly paying ETFs throughout my 7-figure portfolio, make sure to stick around, drop a like down below, and let's get right into the first one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the first monthly paying dividend ETF that I own quite a few shares of, just under 1,500 shares to be exact, is ticker symbol DIVO, or the Amplify CWP Enhanced Dividend Income ETF. Now I personally have been a huge fan of Devo for a while now, and it's because of the fact that Devo buys into a curated small basket of high quality stocks and utilizes a cover call strategy to generate a ton of monthly income for investors like myself. Now Devo is also up in price over time. It's up around 50%, and this is over the last, say, 7 or 8 years. This ETF does have an expense ratio of around 0.56%, so it is actively managed. You're going to have to pay a price for that, but I've found so far that it's been worth it. As far as Devo's holdings, this is probably one of my favorite parts about this ETF. You're getting exposure to around 40 different companies more or less. So again, it is sort of a smaller curated bunch, but names like United Health Group, Microsoft, Procter & Gamble, Walmart, a lot of these different names that are dividend payers and dividend growers, as well as names that have went up substantially over time. But because of the cover call overlay, Devo does pay a nice starting yield, around 4.6% trailing 12 month. And of course, like I said, Devo does pay monthly, so for those cash flow income focused investors that want income in their portfolio every 30 or so days, Devo definitely ticks all the boxes. A few more ETFs that pay monthly in my portfolio that I've been holding onto for years now is ticker symbol JEPI, or the JP Morgan Equity Premium Income ETF. Known as JEPI, I have around 1,248 shares, and of course, don't forget about JEPI's brother or sister, JEPQ, which I have around 508 shares of. Now, JEPI and JEPQ, of course, have very similar strategies. JEPQ tracks the NASDAQ for the most part, and then JEPI, of course, tracks closer to the S&P 500. And of course, with the cover call overlay, both these ETFs have been able to generate a ton of income for investors over time and pay out dividends on a monthly basis. Now, I've held both of these ETFs for years now, and as far as historical performance goes, so far JEPQ has been the real winner here, because over the last year or so, JEPQ has rocketed up in ETF price. We've seen some nice price return as far as JEPQ holders over the past 12 or so months. But JEPI also has not been all that bad of a holding, trading more or less sideways up a little bit, but also paying around 7, 8, 9% yield, with those dividends coming in every single month, which I love. Because I already own a substantial portion of both JEPI and JEPQ at this point, moving forward, I probably won't add too much to either one of the positions in my portfolio personally, but if I were to add more, it'd probably be to JEPQ, just because of the holding breakdown that JEPQ offers. With a lot more exposure to technology, JEPQ has the potential, in my opinion, to move up in share price, and this is even with the cover call overlay, which at least for the most part seems to stunt upside potential. But in JEPQ's case, we've seen a nice bit of growth over the past year. Another monthly paying dividend ETF that I absolutely love and have been buying a ton of as of recently is ticker symbol SPYI, one of my relatively newer positions, the NEOS S&P 500 High Income ETF, which I currently own just shy of 400 shares of. Now, even though SPYI is relatively newer, it's been around since late 2022, this ETF has been getting very, very popular, with assets under management exploding past 1 billion. And for good reason. I think SPYI could be one of the best high quality monthly payers as far as dividend income focused ETFs. Now, we've talked about SPYI ad nauseum on this channel already, so I'm not really going to give a massive breakdown, but I will say that this ETF is in the future going to make up a large portion of my portfolio, at least if you look at the more dividend income focused positions. And this is because I love what this ETF strategy has to offer. I'm a big fan of the holdings, the S&P 500, of course. The management seems to be very on point, and the fact that this ETF does pay around a 12% more or less trailing 12-month dividend yield with very consistent monthly dividends month after month, which as a long-term investor, I absolutely love having an idea of what I'm going to get paid next month. And all in all, if you're looking for a safer monthly paying ETF that has a great strategy, look into SPYI. Check out some of the other channels in my video. We go deep into this one. The last monthly paying dividend ETF that I have been adding to my portfolio as of recently is also another NEOS ETF. So NEOS is also the same provider of SPYI. This one is QQQI. Now, SPYI obviously tracks the constituents of the S&P 500, where I'm guessing this one, without even knowing too much about it, tracks the NASDAQ 100, which tends to be a little bit higher beta and more option premiums, which means probably, just like I see right here, bigger yields. Now, the first thing that stands out above this ETF is the fact that it has a 0.68% expense ratio, which is not cheap by any means, but with a 14.28% distribution yield, along with potential upside, and just knowing how management heavy some of these ETFs can be, I think 0.68% is more or less fair. But looking a little bit deeper into this ETF, the fund's inception date was basically the end of January, so this ETF has not been around all that long. So we have to take all the data and everything that we collect with a grain of salt, because we are going to want to see how this ETF performs long term to know whether or not the strategy is really sound. But speaking of strategy, it says right here, targeted benefits of QQQI's strategy. Number one, the fund seeks to distribute high monthly income generated from investing of the constituents of the NASDAQ 100 index and implementing data-driven call option strategy. Number two, actively managed by NEOS, the fund seeks to take advantage of tax loss harvesting opportunities in addition to utilizing NDX index options classified as Section 1256 contracts, which are subject to lower 60/40 tax rates. So basically, just like what they're doing with SPYI, they're also looking to do with QQQI. By utilizing this classification, they're trying to get the tax rate lower and lower, which I love as a long-term investor. Now, this ETF is very similar to that of SPYI, but instead of S&P 500, QQQI tracks the NASDAQ 100. And because a lot of these names do tend to be a little bit higher beta, because of that, at least so far, this ETF has been able to yield upwards of 16%. We're talking almost a 60-cent dividend every single month so far, and this is since this ETF started paying dividends a few months back. Now, I will say this ETF is basically brand new. It's only been trading for a few months now, so I really want to see how it trades long term, and if or if not, there's going to be some serious NAV decay, etc. But so far, at least as far as a smaller position goes, this is one of my favorite monthly paying ETFs that I've been grabbing some shares of like crazy as of recently. So there we have it, 5 of my favorite, as of right now at least, monthly paying dividend ETFs that I definitely have been buying a lot of shares of, and or I own a ton of shares of across all the positions we talked about. Now, on top of those positions, I've also been grabbing other monthly paying dividend ETFs, things like SVOL, the Simplified Volatility Premium ETF, which is definitely worth looking into. On top of that, I'm a huge fan of DGRW, which is more of a dividend growth ETF that does pay monthly. Also, FEPI, the Rex, FANG, and Innovation Equity Premium Income ETF, FEPI is also worth looking into. And also, we can't forget things like the Global X S&P 500 Covered Call Style ETF, XYLD, and of course QYLD that I own a ton of. So out of all the positions that we went through, along with the ones I just also shared with you, now I want to hear from you guys down below. If you were to have to choose just one of the positions that we talked about in this video as far as a monthly paying dividend ETF, which position would you choose and why? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.